Hello everyone. Welcome to the market opening bell on Wednesday, November 5, your 10-minute guide to the stock market. Overseas markets trended lower, while Hong Kong stocks rose first then fell. The Hang Seng Index opened 10 points lower, climbed as much as 133 points in the morning session to a high of 26,291, but dropped 246 points in the afternoon to a low of 25,911, ultimately closing down 205 points or 0.8% at 25,952. The Hang Seng China Enterprises Index fell 85 points or 0.9% to 9,173, and the Hang Seng Tech Index declined 104 points or 1.8% to 5,818. Total market turnover for the day was HK dollar 239.9 billion. Southbound trading volume reached HK dollar 100.1 billion, with Southbound Capital recording a net inflow of HK dollar 9.832 billion, up from HK dollar 5.472 billion the previous day. Among the top net purchases was CNOOC with HK dollar 1.046 billion, Xiaomi Corporation with HK dollar 1.002 billion, China Mobile with HK dollar 752 million, Hua Hong Semiconductor with HK dollar 329 million, and PopMart with HK dollar 127 million. Top net sales included Alibaba with HK dollar 867 million, Sunny Optical Technology with HK dollar 324 million, SMIC with HK dollar 233 million, and Tencent Holdings with HK dollar 172 million. According to statistics, Southbound funds have net purchased Xiaomi for 5 consecutive days, totaling HK dollar 2.914 billion. Net purchase CNOOC for 4 consecutive days, totaling HK dollar 2.649 billion. Net sold Tencent for 5 consecutive days, totaling HK dollar 2.162 billion. Net sold SMIC for 3 consecutive days, totaling HK dollar 2.326 billion. And net sold Alibaba for 3 consecutive days, totaling HK dollar 2.189 billion. Technically, the Hang Seng Index is fluctuating around the 26,000 level, with the 10-day, 20-day, and 50-day moving averages converging, indicating a lack of clear direction. A breakout above 26,600 or a breakdown below 25,600 would provide meaningful signals. Mainland China's 3 major indices opened lower and continue to decline, with losses widening in the afternoon. The Shanghai Composite Index closed at 3,960, down 16 points or 0.4%. The Shenzhen Component Index closed at 13,175, down 228 points or 1.7%. And the Chi-Nix Index closed at 3,134, down 62 points or 2%. Total turnover in Shanghai and Shenzhen combined reached RMB 1.9129 trillion. The central parity rate of the RMB against the US dollar was lowered by 18 points to 7.0885. Domestic bank stocks rose against the trend. Third quarter reports from banks showed relatively stable revenue, with net interest income growth improving compared to the first half. Several banks reported quarter-on-quarter improvements in net interest margins, showing signs of marginal stabilization, which contributed to higher net profit growth. Spot gold fell below US dollar 3,990 per ounce, dragging gold stocks lower. Zijin Mining 02899 and Lingbao Gold 03330 dropped 5.4% and 6.3% respectively. Chow Tai Fook Jewelry 01929 adjusted prices for certain gold products in mainland China in response to new gold tax policies, with its share price falling another 2.3%. Laopu Gold 06181 declined 4.2% to close at HK dollar 609. Yum China 09987 reported third quarter total revenue of $3.206 billion, up 4% year over year. Net profit was $282 million, down 5%, with earnings per share at $0.76. A quarterly dividend of 24 US cents per share was declared. Operating profit for the quarter was $400 million, up 8%, with an operating margin of 12.5%, up 40 basis points, driven primarily by a 30 basis point increase in restaurant margin to 17.3%. Same-store sales grew 1% year over year, with same-store transaction volume up 4%, marking the 11th consecutive quarter of growth. The company added a net 536 new stores in the third quarter and 1,119 inches the first 9 months, targeting 1,600 to 1,800 net new stores for the full year. As of September, total store count stood at 17,514, including 12,640 KFC and 4,022 Pizza Hut locations. In the third quarter, the company returned $414 million to shareholders, including $326 million in share repurchases and $88 million in dividends. Year to date, shareholder returns totaled $950 million. The company plans to return $3 billion to shareholders in 2025. 2026 having already returned $1.5 billion in 2024. Yum China will host an Investor Day in Shenzhen on November 17 to share further strategic details. Hong Kong Exchanges and Clearing 00388 will release its third quarter results today, November 5. Benefiting from southbound capital inflows and robust IPO activity, average daily turnover in Hong Kong stocks last quarter was HK$ 286.358 billion, up 1.4 times year over year. Third quarter revenue and other income are expected to reach HK$ 7.7 billion, up 43.5% year over year. Net profit is forecast at HK$ 4.75 billion, a 51% increase from HK$ 3.145 billion in Q3 2024. Net investment income for the quarter is projected to range between HK$ 933 million and HK$ 1.205 billion, down 22.7% to up 0.2% year over year. Investors will focus on management's latest operational and business strategies, expectations for IPO market activity and future fundraising scale, responses to international and geopolitical risks, and risk management of investment income, particularly the potential impact of interest rate volatility and market environment changes. The newly listed stock CS Group stock code 9927, which debuted today, closed at 132.4 Hong Kong dollars in Philip Morris grey market yesterday, up 0.7% or 90 cents from its listing price. Excluding handling fees, a bought lot of 100 shares yielded a paper profit of $90. As the short-term funding bill failed to pass the Senate again on Tuesday, the U.S. government shutdown entered its fifth week, surpassing the record set in early 2019 and becoming the longest in history. Notably, the two longest government shutdowns in U.S. history both occurred during President Trump's term. Compounding market concerns over high AI stock valuations, U.S. equities fell sharply. The fear gauge VIX index rose 1.5 points or 9% to 18.7. The Dow Jones fell as much as over 459 points intraday, closing down 251 points or 0.5% at 47,085. The Nasdaq dropped 486 points or 2.04% to 23,348, and the S&P 500 fell 80 points or 1.2% to 6,771. The Nasdaq China Golden Dragon Index, reflecting Chinese ADRs, declined 170 points or 2.05% to 8,125. Among major tech stocks, Tesla fell 5.15% as one of its top 10 shareholders, Norway's sovereign wealth fund, announced it would vote against Elon Musk's $1 trillion performance award plan. Additionally, data from the China Passenger Car Association showed Tesla's October sales in China fell 9.93% year-over-year to 61,497 vehicles. Nvidia dropped 3.96%, Alphabet fell 2.18%, Amazon declined 1.84%, Meta fell 1.63%, and Microsoft dipped 0.52%. Apple rose 0.4%. Reports indicate Apple is preparing to enter the budget laptop market for the first time with the lower price MacBook, codenamed J700, priced below $1 and targeting students, business users, and general consumers currently using Chromebooks or entry-level Windows PCs. Palantir reported better than expected quarterly results and raised full-year guidance, but still fell nearly 8%, making it the worst performer among Nasdaq 100 components. Yum Brands reported third quarter net profit up 4% year-over-year to $397 million, with adjusted earnings per share of $1.58, beating market expectations of $1.49. Revenue rose 8% to $1.98 billion, slightly above forecasts. Same-store sales grew 3%, with Taco Bell and KFC up 7% and 3% respectively, both exceeding expectations, while Pizza Hut fell 1%, missing forecasts. Ride-hailing company Uber reported third quarter net profits surging 153% year-over-year to $6.6 million, or $3.11 per share. Revenue grew 20% to $13.47 billion, exceeding the expected $13.28 billion. Adjusted EBITDA rose 33% to approximately $2.26 billion, in line with expectations. Operating income increased 5% to $1.11 billion, far below the expected $1.62 billion. Total gross bookings grew 21% to $49.74 billion, above forecasts. Active platform users rose 17% to 189 million, with a cumulative 3.5 billion trips completed. Uber expects fourth quarter gross bookings to range between 52.25 billion and 53.75 billion, above the expected 52.1 billion. It adjusted EBITDA between 2.41 billion and 2.51 billion, with the market median at 2.47 billion. Several Federal Reserve officials recently expressed uncertainty about a December rate cut, with markets pricing in a 65% probability. The US dollar index rose 0.2% to 100.08, hitting a 3-month high. Gold prices fell below $4,000. Bitcoin dropped nearly 5% to a 4-month low, down about 7% over the past 2 days. Ethereum also fell over 5%. Our stock pick today is Angelalign, stock code 6699. Angelalign has implemented a forward-looking growth strategy, prioritizing early orthodontic treatment and lower-tier markets as drivers of sustainable growth. In the field of early orthodontic treatment, the company worked to enhance public awareness of the benefits of early intervention in children's oral health and bolstered Angel's brand influence. In lower-tier markets, the company continues to enhance the professional capabilities of its sales and clinical teams. In July, it completed strategic investment in Shu Ya Qi, a clear aligner brand known for its cost-effective products and extensive clinic network to accelerate market penetration, resulting in steady increase in the proportion of case shipments to lower-tier markets. In the first half of 2025, the company achieved approximately 108,600 clear aligner case shipments, representing a 14% year-over-year growth, while its global markets excluding mainland China achieved approximately 117,200 clear aligner case shipments, which include Angelalign branded aligners, Editech branded aligners, and made-to-order aligners for simple cases for key strategic accounts, representing a 103.5% year-over-year increase. This reflects both the low base of its business in the previous year and the initial success from entering new markets where it previously had no presence and benefiting from low-hanging fruits. Its revenue for the 6 months period ended June 30, 2025 was $161.4 million, representing a year-over-year increase of 33.1%. Revenue generated from the mainland China market was $89.7 million as compared with $89.1 million in the 6 months period ended June 30, 2024. Revenue generated from the global markets outside of mainland China was $71.7 million, representing a year-over-year increase of 123.4%. Gross profit was $100.6 million, representing an increase of 32.9%. Its gross profit margin remained relatively stable at 62.4%, primarily because it's still using treatment planning center and manufacturing sites based in mainland China and is in the process of expanding such centers and sites to outside of mainland China. Its net profit was $14.2 million, representing an increase of 583.6%, and the net profit margin improved to 8.8% from 1.7%. To support the rapid expansion of its global business, it has initiated the development of a more resilient and diversified global supply chain. As part of this initiative, it plans to establish or expand manufacturing and treatment planning facilities in key locations worldwide. As an example, its treatment planning centers in Brazil and Southeast Asia are currently providing treatment planning services for the United States. This evolving network will ensure a timely and stable supply of products and services for its global customers. Additionally, it has also devoted substantial resources to upgrading its data security infrastructure and its operational processes to ensure compliance with data security and privacy regulations in all major countries and regions it operates in. Suggested buy price 66 Hong Kong dollars, target price $73, stop loss price $63. I do not hold the above stock.